Good morning, friends. Today we are going to discuss about accounting for income tax. So, firstly, introduction. So here we are going to talk about Woolworths. Woolworths is the largest retail group located in Australia, and it have more than 20 million, 20 lakh 50,000 employees working in this retail industry. Its headquarters is in Sydney, and its regular customer are 29 million. The main aim of Woolworth is to provide best experience to the customers and provide a good quality of food products. Report deals with tax expenses, temporary differences, and different assets and liabilities. So the other thing is accounting concepts. So basically, accounting concept is divided into two parts: accounting profit and taxable profit. Firstly, accounting profit. Accounting profit that arise after deduction of expenditure from revenue is known as accounting profit, and it's totally based on accrual basis. Taxable profit, deduction the expenditure of company from its revenue is known as taxable profit. It is based upon cash system for taxable accounting. So the other thing is the temporary difference, taxable temporary difference, the deduction temporary differences, and deferred taxable assets. Firstly, temporary differences. Differences between the carrying value of an asset or liability is a balance sheet and its tax base. There are basically two types of deduction: deduction temporary difference, and the other one is taxable temporary differences. Firstly, taxable temporary differences. It brings lower taxable income in the present value compared to taxable accounting profit. The other thing is current year tax payable is less compared to accrued income tax. Other point is differentiate tax assets. Assets of the company due to expenses, payment of tax or advance taxes. Deferred tax liabilities. Actual tax pay in advance less than the current asset of income tax. And the last one is deferred taxable liabilities. Actual tax paid in advance less than the current year of income tax is known as deferred tax liability. The other point is recognition criteria of deferred tax assets and deferred tax liabilities. In this, Woolworth recognize a differentiate tax assets and liabilities is done by using the balance that method. The other thing is utilization of expected rates. It have temporary difference as accrued and does not affect accounting profit or taxable profit. The other thing is tax expenses. So as we can see here, the tax expenses of year 2019 was 668 million of Woolworths. Profit and loss statement includes 730 million and current tax expenses of Woolworths in 2019. Adjustment done for current taxes of prior periods, and the last one is treatment done for defer of taxes. As you can see here data, the current expense of the year 2019 was 730 million, and in 2018 it was only 699 million. Adjustment recognition of the current period in the method of current and priority is around 11 million, and in 2018 it was 6 million. So overall in this data we can see that Woolworth is growing on a regular basis in a huge amount, and here, and as you can see the data of 2019 and 18. So the other thing is company tax rate. As you can see, accounting profit of the company for 2019 before tax was 3427 million, and tax rate was 30%. The tax amount was 1028 million, which is a really great amount. Uh, Income tax booked in profit and loss accounts is 668 million, as we have seen in a previous slide in 2019. So reasons for differences: tax effect of capital gains, the first one. The other one is tax effect on the non-deduction expenses of 9 million. The third one is tax effect of the current year unrecognized losses of 4 million in 2019. And the last one is adjustment of tax related to prior years. So the other topic is deferred tax assets, liabilities that is reported in balance sheet. So deferred tax assets arise as the tax payable by the company is less than the advanced taxes. The second point is income tax expense and difference in carrying about of assets and liabilities. The third one is difference tax liability happened current due to certain income tax or income of the liabilities. As here you can see the data of 2019. It's a type of balance sheet of Woolworths, and in this there are different account of reconciliation, reconciliation of other income, acquires and other income, and closing balance. So this is a very huge amount of data for 2019 of Woolworths. So the references tax assets arise as the same tax payable by the company is lesser than the advanced tax. The other point is income tax expense and differentiate in carrying amount of assets and liabilities. The third point is deferred tax liability happened in current due to certain income tax or income that is of income tax liabilities. Current, the tax assets. Depreciation tax rate charged by the companies are different from other rate and pressured by the statutes. Profit with depreciation charges, however, deduction of depreciation will be rates decided by the law. The other point is income tax expense. The income tax expense is projected in the low income statement, differs from income tax paid in cash flow statement. The third point is income statement has tax expense in 2019 was around 668 million. As you can see, the other point, income statement paid in 2019 was 668 million as per the cash flow statement of Woolworths in 2019. Excess tax pay can be refunded payable as per the laws of 2017. The other slide is concepts of temporary differences and permanent differences. Temporary differences is the difference between the carrying value of an assets or liabilities in the balance sheet as a tax base. The other point is deduction. Temporary differences results in deduction expenses when the assets will be recovered by the liabilities and will be settled. And permanent differences does not create the delays in tax or different liabilities occurred when the tax laws of countries excluded some revenue of item of income tax. Insights. Losses can be carried forward and set off against the profit of future years. Interesting part of that accounting priority might not require paying tax if they have any income statement expenses. Inclusion of carrying another values that occurred values of assets and liabilities are tax confusion. Conclusion. Woolworths utilize concepts of accounting for income tax. Computing of profit for the company is done with the accretion. Adjustment of the current profit will be carried out for forward losses. Overall, taking home. In the terms of accounting terms is very important in the huge level of corporate industry. In this, thus to manage big numbers, we need to have a corporate accounting, but the corporate accounting made it possible. Thank you.